Hi, welcome to WealthMills Securities Weekly Market Wrap. It's always a joy for me to come before you to share about the market updates. I'm Kranthi Bathini, Equity Strategist at WealthMills Securities. As we witnessed the market, last 1 week, markets were very volatile. The markets were starting with a positive note, and in the middle of the trading day, every day, there were some volatility, and markets tried to take some bit of profit booking in the afternoon. And by 1:32 o'clock, after the positivity that's coming from European markets, Indian markets are again recovering and they are closing at a positive territory. That's what the whole saga of events that are happening in the equity markets on a day-to-day basis. Altogether, every day markets have been gaining strength and they are moving in a positive territory. But Friday was an exceptional day. Markets came down, markets witnessed profit booking. Altogether, Sensex is nearing to the level of 50,000. Most probably in next coming weeks, market can touch 50,000 levels, which is a magic figure for equity markets in India. As usual, FIIs are continued to be the net buyers on a daily basis, and the domestic institutional investors are continued to be net sellers on daily basis. As we are in the first month of the calendar year Jan, we are awaiting for the disclosures from different companies, how the FIIs, where the money is moving towards, which kind of companies the FII flows have been going, whether it is the large cap stocks, small cap stocks. We are yet to verify the data, but sooner or later in the next coming days, we could able to have a complete thesis of where FIIs have been inching up their stakes in the stocks we are going to see in the next few days. And at WealthMills Securities, I would be sharing all these data with all our clients. And also, in the first week of February, the budget will be presented in the Parliament. That's a big event for equity markets in India. One need to know the fact that is this budget, currently the budget day is a big day for stock markets always. But as the indirect taxation, that is, which is a key component of earlier budgets, due to the introduction of GST, the indirect taxation has been moved to the GST Council. So, what we are going to expect from this budget, it is with respect to the direct taxes, that is income tax. We have been seeing the reforms and required things the government has been taking place in the budget that we have witnessed. But the feelers what we are getting from the Minister of Finance and with the initial votes from the Finance Minister, they want to make this budget as a more reformist budget. So we need to wait and watch how the big bang reforms they are going to take place. My expectation towards this budget is quite nominal, because as and when this government, especially if they say they are going to bring big bang reforms, the expectations of the market levels will go up, but the government may not, the past, when we see the past few events, the government is not meeting the exact expectations of the investors. So if they are not disappointing the investor fraternity, I am more than happy. But if they give a moderate budget, that's okay for them, okay for the markets. A market is not expecting any kind of big bang reforms at present. Of course, the initial feelers are there going to be some big announcements. In anticipation of these announcements, currently the markets are in a positive territory, supported by the, as usual, FII flows. But what I expect in the days to come is a complete revival of the economy. Economy is going to be back on track. It's already on the verge of growth recovery. We are going to witness, and we are in a earning season. Companies are, whatever the companies announced the results, they are up to the mark. On 22nd Jan, Reliance is going to announce their results. That is one of the key event we are going to looking forward. And what will be the companies in IT sector? They announced the results. They are very good results and they are up to the mark. And the guidance also what we are receiving from the companies is in a very positive commentary what we are receiving from the different companies. Market is going to expect some kind of incentive towards the infrastructure, power infrastructure, and also as because of the COVID, tourism sector has been taken a back seat, and also there need to be revival in the hospitality, the hotel sector. So government may announce some kind of incentives towards these sectors like hotel and travel and tourism. So my wish list with respect to the budget is very nominal, because government have done required things for the markets as of now. If they are not touching any kind of long-term capital gain, in the initial stage, nearly 7-8 months, there was a discussion that they are going to remove the long-term capital gain taxes to revive the stock market. But right now, as the market are going to touch 50,000 levels, I don't think so. Finance Minister is, she may not be interested to touch any kind of LTCZ, long-term capital gain taxes are concerned. We need to wait and watch. If they are not increasing, the market is very much happy. And there is a dividend distribution tax, dividend for right now for NRIs and FIIs. The dividend tax, the TDS will be deducted at 20%. So there are some FIIs who are expressing their concerns because if the country of residence of the investor is if the country have a double taxation treaty, that the TDS should not be 20%. So in this budget, government can give greater clarity with respect to the TDS and taxation with respect to dividend is concerned. These are the basic expectations of the market. We can expect some kind of incentive towards the real estate sector. Of course, the government is making, state governments are making these efforts, and capital goods, power infrastructure. These are the pockets of investing I'm looking forward from this budget. What is the strategy investors need to follow in these kind of markets when the market is, the Sensex is about to touch 50,000 levels? We get so many calls from investors every day. Markets are touching, markets are at higher levels, market is at all-time high levels. See, this is a usual question always investors tend to ask. And if an investor want to at this point of time, they think that, oh, markets are trading at 50,000 levels, whether this is the right time to invest in stock markets or not. If we observe the data, okay, there are many of the new first-time investors that are coming to equity markets. Of course, whenever the market goes up only, the first-time investors will come. But always there is a question, okay, the markets are trading at high, this is the right time to invest or not. Take this as an example. For example, if the markets are trading at 25,000 or 30,000 levels of the Sensex, what do? You might be thinking market will be further coming down, I'm waiting. So, investors lost more money by waiting for corrections and market reversals. So, don't try to time the market always. So, if you have some capital, try to infuse in a staggered manner. Just if you have $100 to invest, just start with $10 to invest right now in these markets. Don't wait for the market. There are many people who lost the opportunity in March, that they were waiting for the market to correct further, but market is from a rock bottom to today at nearing to 50,000 levels. So this is the strategy investors need to keep in mind. Try to infuse your capital in a staggered manner, and wherever at the same point of time you have excessive gains in your portfolio, in a staggered manner, try to book some profit and try to get into cash, and every day try to use your capital, try to use these dips to enter into the markets again, try to build up your portfolio. This week, with respect to the stock specific advice is concerned, this week I am going to give a stock which is a very high risk stock. It is a small cap stock, but this stock is not suitable to everyone. Those investors who want to take high risk can be suitable for investing in this stock. But in this stock right now, the margin of safety is very high. The valuations are very cheap. This stock is into media and entertainment, and they produces movies, and they have India's largest content bank in their portfolio. The stock name is Eros Media. Of course, the quality of the management is they are well versed with the media industry and also box office. They have produced iconic movies like Bajrang Bhaijaan, and there are many blockbuster movies they produce across all the regional languages. So this stock got corrected nearly 150 rupees to currently this stock is trading at 25 levels. Very good level to enter. But what I am interested in this stock is in 2018, when the management of Eros Media they negotiated their content to sell to Apple or to Amazon. Their content is valued around $1 billion. That is a huge money. Whereas currently the market cap of this company is around 200 crores. So even though I said it is a high risk stock, those people who want to take their position, the stock is well positioned to enter at these levels. And I'm sure in the next couple of quarters, as the market revives, the money will be chasing these kind of stocks, beaten down stocks, and the stock can give decent returns from these levels. So I advocate our investors who have the high risk appetite, they can enter in a company like Eros Media, and this company, the Eros Media, one of their subsidiaries, is listed on US stock exchanges. It is on Dow, and also Reliance Industries having 10% stake in Eros Media International. So the stock valuations are very attractive, 200 crores market cap, and in the days to come, as the economy revives, these kind of stocks going to deliver very good returns, and people will come to say these kind of stocks delivering good returns. And I'm advising investors at the very early stage of investing in this stock. So Eros Media, you can staggeredly you can invest in your portfolio, have some exposure towards this kind of stock where the margin of safety is very high. That means if you are entering in this stock, the downside risk is very limited and the potential upside is immense in this kind of stock. Invest in Eros Media at these price levels of 25 to less than 25 is a good level to invest in this stock. This is what I have this week with you. I have been traveling from Mumbai to Andhra Pradesh, so I'll be updating the different updates. What I see, I have driven from Mumbai to Hyderabad and Hyderabad to the east coast of Andhra. What I observe with my personal observation is, even though despite of COVID lockdowns, despite of the slowdown in the economy earlier, the market is reviving and we are witnessing a vibrant and strong rural economy. I'm sure whatever my personal observations will reflect in stock markets in the days to come. Thank you.